The Philippine Stock Exchange Index or PSEi finally showed signs of recovering in February, as the main index breached the 6,500-point barrier for the first time in 9 months. Among the major factors causing improved market sentiment were the improved earnings reported by a few listed companies, and the Bangko Sentral in Pilipinas or BSP reducing policy rates. Meanwhile, the United States Supreme Court ruling that President Donald Trump cannot arbitrarily increase tariffs on products entering the U.S. also boosted market sentiment. The peso is also showing signs of recovering against the U.S. dollar. At the end of February, the peso stood at below 58 to a US dollar. However, it is too early to tell as to whether the stock market is on its way to recovery, as there are forecasts of higher inflation in February, and below 5% gross domestic product or GDP growth in the first quarter of this year. In summary, the PSEi opened at 6,297.08 points on February 2 and closed at 6,611.24 on February 27, gaining 5%. On the other hand, the PSEi opened at 6,135.06 points on January 1, and closed at 6,328.97 on January 30, for a 3.16% increase. The lowest close of the PSEi in February was on the 2nd, at 6,297.08, and the highest close was on February 26 at 6,625.46 points. Meanwhile, the highest close of the PSEi in January was at 6,487.53 points on January 15 and the lowest was at 6,135.06 on January 1. The PSEi started weak in February, or at its lowest point for the month at 6,297.08 points. This shows that investor sentiment was still badly affected by the 4.4% GDP growth for 2025. In contrast, the full year 2024 GDP growth was at 5.7%. Among the factors cited for the low GDP growth in 2025 are governance issues, particularly the flood control scandal, and slowdown in domestic consumption. The peso also struggled against the US dollar in January. However, the stable inflation rate of 2% for January slowly propped up market sentiment after it was announced on February 5. Department of Economy, Planning and Development Secretary Arsenio Balisacan said that the stable January inflation rate was also due to slower food inflation, or 0.7% in January compared to 1.2% in December. On February 10, the PSEi finally broke the 6,400-point mark, or the first time since July 10, 2025 when the index closed at 6,413.18 points. One of the factors for the PSEi recovering to the 6,400-point level was the peso still holding firm against the US dollar. The peso closed at 58.53 to a dollar on February 10. This is what Luis Lim Lee Non, Regina Capital Development Corporation head of sales, said on the stable peso, to quote, "Sentiment was supported by the peso holding firm against the US dollar, which encouraged renewed foreign inflows." From February 11, the PSEi left behind for good the 6,000-point support level, as the peso continued to remain strong against the US dollar, and the Bangko Sentral in Pilipinas or BSP reduced key interest rates on February 19. This is what BSP Governor Eli Remolona said on the decision to reduce key interest rates. "Our decision today may actually help to restore confidence, boosting investment and consumption. The pace of economic recovery will depend on how quickly confidence returns." The U.S. Supreme Court also ruled on February 24 against the high tariffs imposed by the Trump administration on shipments to the U.S. This gave hope that more Philippine exports can enter the U.S. market. Furthermore, a number of listed firms reported better net incomes for full year 2025. Among these are SM Investments Corporation realizing a 10% increase in its consolidated net income to 90.5 billion pesos in 2025. BDO Unibank reported a record net income of 87.2 billion pesos in 2025, up 6% from 2024. Megaworld Corporation logged a record net income of 24 billion pesos in 2025, up 11% year-on-year. Maynilad Water Services posted a 2025 net income of 15.219 billion pesos, up 19% from 2024. Hence, from February 25 to 27, the PSEi hovered at above 6,600 points for the first time in 11 months. Moving forward, however, the Philippine stock market still has to navigate uncertainty, as there is still no clear sign that the country's economy is on the way to recovery. For one, the University of Asia and the Pacific or UAP and the Business Economics Club or BEC said in the latest issue of the market call that they see mildly faster growth of only 3.3% in the first quarter of the year driven by higher domestic consumption. This is what UAP and BEC said on the projected Philippine growth for the first quarter of this year. To quote, "Thus, we expect a mildly faster first quarter GDP growth of 3.3% year-on-year from 3% since the government still needs to ramp up its spending." Also, the BSP sees February inflation to settle higher at 2.3% to 3.1%, faster than the 2% of January. This is what the BSP said on the projected inflation for February. Upward price pressures could stem from higher prices of rice and fish, elevated domestic petroleum prices, and increased electricity charges in Meralco-serviced areas. Over the horizon, Unicapital Securities sees the PSEi recovering to 6,800 points within the year. Unicapital cited governance issues, monetary policy changes, and the current global trade regime as the challenges the stock market is currently facing. This is what Unicapital said on the factors that will affect the stock market for the rest of the year. And to quote, "Number 1, the corruption scandal. We still think that infrastructure spending will take time to recover and might see some impact on the second half of the year. Next is monetary policy. We're seeing a pause after these 25 basis points, which is our house view. And then lastly is the geopolitical tension and the US tariffs."